Today is Monday, January 17th, and the markets are closed in honor of Dr. King. And we want to take a minute here to talk about options expiration. Now, we put out this article over the weekend that is discussing how there are a lot of deep in the money calls that are set to expire on Friday. And there are obviously a lot of comments and questions about this expiration. And so we just want to take a quick pause here and explain some of our views here. So first and foremost, we are here to highlight the data. The data says that there are a lot of deep in the money calls expiring. Now, second, there are caveats to the impact that this may or may not have. One, if we look at the worst case scenario, that is everything is max long calls, we show that there are over $125 billion delta notional exposure. Now, it is likely that a lot of those calls are mixed, or a blend that is, of long and short positions, so that would decrease some of those deltas. Second, it is possible that some people will start trading out of those deltas early this week, assuming that they are long, and so the exposure of those positions, right, the deltas that would come off that are possibly hedging those positions could start coming off on, say, Tuesday, and then that could go into Friday. So that could lessen the impact. We would note that it could be very well likely that a lot of these deltas that are held are not simply stock. It could be that a lot of the deltas are offsetting call positions that expire sometime out in the future, right? And third, as a lot of people note, it's possible that the options will be held to expiration, in which case the delivery will be exchanged, and the dealers who could possibly be long shares as a hedge, their position will simply flatten out because of the options exercise. So we are not here to say that this is Armageddon. We are not here to say that we know that this is going to make the market go up 10% or down 5 or 10%, but we are here to point out that this is, statistically speaking, a very large expiration. And if you compare it to previous dates, as we did at the bottom of this exercise, you can see that last year was a very big expiration. There was a lot of volatility in and around this time because of GameStop and the like. It's hard to know what the impact of expiration was, but that was also a very large expiration. That is 2021. And if you look at previous years, the deltas expiring in January were magnitude smaller, right? They're less than $1 billion we calculated in 2020, and in 2019 it was a similar thing. So we can offer some insights here that there are a lot of deep in the money calls expiring. And so the main purpose of this data, if you want to look at it, is that if things get volatile this week, you can know, oh, look, options expiration could be something that is compounding volatility this week. It doesn't need to be that all stocks crash because of this or all stocks rally because of this. Maybe nothing happens, right? But if there's an excessive amount of volatility or some strange things happening in and around these days, then you can tie it back to the options expiration. By looking at this data, you understand that there is a lot of deep in the money calls expiring, and that could impact volatility. Now, one of the things that everyone's saying is, well, look, everyone's just going to wait for the calls to expire, and that will offset the dealer's long hedge position, again, assuming that a lot of these calls are short, and that would be true. But let's just take it, for example, Tesla. So here what we did was we looked at all the options expiring in Tesla, and we took the delta. Now, the delta notional, the net delta notional, if you took calls as long delta and puts as short delta, and you netted that out, you can see that it's $32 billion of delta. And so $32 billion is quite a big number. Now, the question is, if you believe that it's all going to get exercised, if I bought, let's say, the 700 call last year, I probably paid somewhere around $25,000 for that leap. And that's based off of current at-the-money options prices for next January's expiration. So I paid $25,000 for that call option. And if I'm going to have that call assigned to me with Tesla around $1,000, so I'm going to have to come up with $80,000. So I don't know how many investors have the interest of taking the stock delivery or actually have the funds, right? Because those are two different things. Now, a lot of these calls are probably not even individual investors. They could be offsetting convertible bonds or some other type of, volatility structure, in which case they could all be hedged out by the person who initiated the trade. We just don't know. But what we do know is that this is a large expiration, and so this is information that could be valuable to you as the week unfolds. And this is why we say, hey, you may see excessive volatility. Now, if you think back to what a gamma squeeze is in a lot of these names, you see these instances where the stock will go crazy on something like a Hertz delivery, and it just doesn't make sense. Fundamentally, people say, look, the change in market cap from Tesla on this deal doesn't compute really. I don't understand it. But then when you look at the options position, you'll see that there are tens, if not hundreds of thousands of calls trading, and that exacerbates the volatility both up and down. And so that's what the point is here. There is a big expiration. This could impact volatility. We don't know. We are highlighting that, look, there are big positions, Yes, they could be offset. Here are the ways they could be offset. But if I'm trading one of these names, I want to be aware of this data so that I can make more informed decisions and more informed trades. So we hope that clears some of this up. We will be updating this data for our subscribers. If you're interested in a free 7-day trial, you can simply hit subscribe now. And again, it's a free 7-day trial. We provide a daily note, which explains our view typically of the S&P 500 and the NASDAQ. And we will be providing, obviously, daily updates of these expiration tables as we approach expiration. So I hope this information was helpful. Again, we'll put the link to the article as well. And there is that download link so you can pull down this data yourself, which shows an estimated possible impact based on average daily volume for around 1,000 different stocks. If you have any questions, please put them in the comment section below or hit us up at SpotGamma on Twitter. Thanks.